Hey everyone, this is DayTraderRockStar, and this is the 10 for 1000 watch list for the week of April 16th. And a good watch list coming up, because what we're going to do is actually look back at last week's watch list. And even though last week was a very volatile week, it actually performed quite nicely. And if we look back at the watch list, most of the good setups, were right on and actually gave you good reactionary bounces. And we also looked for that early week pullback and a midweek rally. And then Friday, actually, after the Chinese GDP numbers came out, kind of reversed all that and pushed back. So it was a very up and down week, and you can see it on the charts. This is what we're looking at. This is actually a monthly, a daily chart going back until last year. And I put this S&P downgrade of the U.S. back here in August. I forget what it was, August 8th or something like that. Because what I wanted to do is actually, go back and show you the last time these markets were really oversold. And, each time you really get down under this 20 level, there's usually a big reaction in the market. And in this case, when we got oversold, we were really basically oversold here. You can see by the line that we weren't on the lows yet, so we could, and the reason why, there was a lot of bad news in the market right here that really flushed the market down, and that's one of the more important things that we have to always pay attention to. That market news trumps everything. It takes out technicals, it'll take out anything, things will get, washed away, and everything, it's at that point when there's bad news out there, you got to clear the table, you got to restart. And that's, going into this week, that's the only thing I kind of fear is some type of bad news that pushes us over here, because you could see the other times we got down, basically that really good oversold level, reacted into a nice bounce. Same thing here, a nice oversold level, really starting to make that trend line. And now again, the combination of this trend line, which started back here in September, October, went through November, and then we touched it exactly. 30 cents away, right, 30 cents right on the trend line. We bounced off of it, and we got oversold. And that was one of the main reasons I was looking for that bounce in the latter part of the week. And then you can see on the 60-minute chart, here was the pullback, here was oversold 60. So you had multiple time frames looking for that bounce, and here was your bounce. And what happened was you got overbought on the 60. Just like that, right when we got up to the overbought level on the 60, market ran into a little problem, and back down we come. And it helped, with the GDP of Chinese GDP. It was rumored on Thursday, so that put a lot of spunk in the market on Thursday, because there was rumors of a positive, report coming out of China, positive for the markets at least. And the market ran on this, and then of course that came out that night, 10 o'clock at night. And it wasn't as good as expected or rumored, and the market sold off the rest of the day on Friday. So it gave back most of the gains that we got in the previous day, and that's, that was, you can't prepare yourself for that. What you can prepare yourself for, and this is the important lesson, is just to take a look at the signals. Once you get into an overbought and oversold signal, and you pretend there's no news involved, you just keep your mind free from all outside influence, unless there's something out there that's overwhelmingly bearish or bullish on the markets, news. But other than that, you're looking at, taking the entries, multiple HPS setups, and taking them off on the 60 to minimize your downside risk. Because whenever you get overbought on the 60, you just raise your chances of that market to continue to just cycle out. What it does, it moves up, it moves down, and you can time this. You can see as we get overbought, there's a chance that we pull back and you get oversold. Why is it, and most times that happens. You always usually get a reactionary move when it's down here to the upside. Here's that move, and then from here usually get, you get that move up. So now we're getting back into an oversold level on the 60. We're still holding off the recent lows. And this kind of represents last week's, action. We were looking, in the beginning, and that's what I wanted to do. Again, this might be a little longer video than normal, because I have a lot of education in this video. But we could actually see going back. This is how I broke down the week. We knew that with the futures, the overnight futures were down, and we knew that We knew that we're going to have that gap down on Monday, probably lead into Tuesday, and then and then we were looking at basically the 60-minute to get oversold, and the daily to be oversold, but really the 60-minute, and that's what gave us a nice little breakdown there. We had a nice little tight channel, and we popped right up, and you can see everything came in. So what does that leave us now? That's what we want to know, And again, I think it's important not to try to predict or guess at what the market is doing. Just let the market give you the best signals possible, and then take those signals and use them. All right, so let's just go back one more time and take a look at that 60-minute chart. And you can see what I want to do right now is something, we'll do it live with you. I noticed this before, you can see the rotation. So when the rotation sets up, when you get the overboughts and oversolds, you have greater, that's one of the main indicators that I look for. Now I know I'm going to start looking to go long. I want to start looking to either sell or go short. And, but what comes in to overlay these are the other indicators where we're looking for that recognizable pattern. So you saw this downward channel line. You knew that there was a parallel line here. You could buy it off of this, off of the bottom part of the channel, especially getting oversold. Certain things like that. The bigger the pattern, the better. That was pretty tight. But now that what I'm looking at here is basically you have a pivot area. I want to draw this trend line down through this pivot area. And I see this other pivot area right here. And this is actually better because this is really the low from this channel. This is that really the one you should be making this trend line from. So we're going to take that low right here, and we're going to drop. And look at that. Look how this makes this parallel channel now. So I'm going to get rid of a lot of these things in here so it makes it a little clearer. Now you can see there's basically a brand new channel that's developed. I'm just going to get all this stuff out so we can make it clear. I want to see exactly how this. I'm building this right now with you, and I want to make sure it's all set up properly and actually. And again, you have to do it from the extension of the candles. The tails, and sometimes if you're off a little, like I just throw them up there, they're going to make a big difference between moving that one a little and this one a little. And look at how parallel this becomes, from this pivot area, from this pivot, from this pivot, from this pivot. So now we already start building our next trade up. Well, as this 60-minute pulls back into an oversold level, we already could plan out certain levels in the market. If we come down to a double bottom, that's a good level. That's 1358. 1355 to 1358 level, and then underneath that, if you wanted to follow this trend down and actually try to take this trade off the lower trend line, you're talking, you can measure that out, and that as it's getting closer, you could tell that it's maybe 1345, in that zone, give or take 5 points. But that's where we want to really concentrate on our higher probability setups, and the higher probability trade setups are always. They're always better. There's no doubt about them. They're easier to get into. You feel comfortable. The confidence is there. When you take something that you're anxious to get into a trade, you feel like you know more about it than the market does, and that it should be going up. But remember, the trend and the market trend is very important. So, it's very easy to just wait for your turn. Let this get oversold. The daily is actually quite bullish. So at this point right now, going into this week, the only thing I would be really worried about is some kind of bad news, which could, turn this stochastic over again and kind of and give us that forced selling, and this would break off. And we don't know of how that's going to come. That's going to be just more European news. There's going to be something else out there that could break us down, and it's definitely a possibility. So I got to put that out there, and I have to understand that. But before that happens, I do think I don't think that's going to happen. What I do think is going to happen is we're going to set one right back up, and you're going to see a lot of these stocks are setting back up again. And that's what I want to really go into. Not as much calling what's going to happen with the S&P here, but some important stocks that that we're going to be looking at. And just let me do this fast. This was last week's watch list. This is just a picture of the screenshot. We were talking about this is where the market was at that point. And if I played this, you'd hear it. But it just has me talking about the 50-period moving average, which was an important level in this underlying trend line. and where we're going to gap down to. And you can see it at that point, the stochastics were pointing down. So it was very negative at that point. You know, now going back to today, and we'll go to the daily, we're oversold and we're heading back up. So the potential now, you know, the momentum is shifting. If we could get that positive momentum back into on Friday's close, out of Friday's close, because we sold off pretty hard on Friday, and we could just start building this back up. There's no reason why I don't think we could go back and take out recent highs. I think Friday was just a very volatile day, and it was kind of a run up on a rumor, and the rumor came out and they took it back, and it was almost a reset of the button. So Monday we start things fresh again. But let's just take a look at let me see what I was looking at here. Yeah, this is the video, and I was just going to take a look at how important the video, the 10-4,000 watch list, is when it comes to the research portion of it, because what we want to do is really plan out the trade so the trade is actually coming to you and that you're not chasing the trade. That's what I always like to do. So in this case, last week's one of the last week's trade was Halliburton. This is the first stock off the last week's thing, and this is just screenshots of the video. It's just me pushing the video over here. But basically, what in this this little first part of this video, you might see this for the first time if you're not a member. But the 10-4,000 watch list, I want to really develop that to take the entries into higher probability setups, but into that not chasing, but letting it come to us and just being ready for it. And I think that means so much. So the Halliburton, if we take a look at HAL, that was last week's watch list. We saw the buy zone was 32 to 31. So let's just actually take a look at each one of these setups. And even though last week was so volatile of a week, look how these setups performed. All right, this was last week. This was basically, I just redid it. This was the this was that buy list. So let's go back here. This is this area we're going into 4/6, April 6th, and then we go back to the chart here, and you can see here's 4. This is basically what it was, and we pulled right down into that buy zone. Pulled basically right down to 31.65. 31.65. The buy zone was 32 to 31, and from that point on, we had a nice bounce. We went up to $33, and then again we pulled back at the on Friday. But this from the buy trigger to the and from the buy trigger we're oversold on the 60. That's why we actually put this up here, because we were actually oversold here. If you would have just paid attention to the stochastics being oversold and then getting overbought, then a perfect exit would have been there, and you had nothing to worry about. So it was, everything on like that worked great. Halliburton, I'm just talking, that's more in the video. So another one was Schlumberger, SLB. And again, the buy zone for this one last week was 67.70 to 66. And I'll just go out to Schlumberger, SLB. And here was your 67.70 to 66. And it came down to right under, I think it came down to 66.60. But what it did is it pulled back down here, and if you were up on your trend line and watching at the time, you would have seen why it was such a good buy level here, because everything was set up, especially you had some coil stochastics. But the important thing about the methodology is that recognizable pattern, being able to recognize this as a channel line. So there's a lot of support here. We oversold on multiple time frames, and from this point on, look at the bounce. That bounce took us to $70 and change this week. So from the entry from early this week to the exit, you had a nice bounce, a beautiful trade on Schlumberger. Except Friday, again gave some back of it. But you can see on the 60, these like Schlumberger is also kind of getting oversold quickly on the 60, and we're holding off for recent lows. So a lot of these stocks are kind of still in play. I'm still holding my basic material stocks, because I do feel that we're still in that really good buy zone down here, even though we were getting very choppy the last couple of days. And these are really, really great levels. So I don't, the pullback on the 60 can actually just continue to move this one up to the top part of the channel on Schlumberger. Again, the other basic materials, I got a couple new basic material stocks that I want to put on this week's watch list. We're going to get to that in a second. I just want to show you a couple other stocks from the, let's just go back to the video here for a second. That was your Schlumberger, so you could see it came right down to that level and ended up going up to $70. Would have been a great, would have been a great trade if executed properly off of that, buying into the weakness. And again, if we probably look at that 60-minute chart, yes, you can see how it got overbought, and that's how we stopped up here. And it was about, you could tell there was a little resistance up here, but basically oversold, overbought, signal, trend line. You could have one signal as oversold, but unless you have multiple indicators, you don't really want to take that shot. So having that underlying trend line, dual trend lines crossing over here, the combination of that, knowing that we're in a decent channel, everything else looked really good. So that was a really good entry level. All right, so the next one now. Let's just move the video along. Talk about Schlumberger a little bit more. The XLE. All right, so let's take a look at the XLE. Where are it? All right, let's take a look at the XLE. One of my favorites going into this week, still. And I had this as a wedge pattern, but channels are better out of wedges because lots of times a wedge will fail, but it will end up being really actually a nice little channel, and it's just depending on where you want to, what pivot you're going to use. So sometimes I'll look for a wedge pattern. But in this case, it looks like it's actually going to be the combination of this trend line and this trend line where the gap is. And like I said, whenever we have a gap, there's usually a good trend line starts here, and not this one right here. Either way, if you put this one in, take this one out, you can see that channel, was perfect. And I bought down into I had my cost average just over $69. So it was a good overall. It was a good entry zone, and it moved up to about 70 to 69.93. So it moved up about $1, and that's a great move in a week based off starting to scale in when we started liking this level. I love the level. I still like the trade. I still love the level. We're going to be oversold here. And again, I had the opportunity to take it off here for a profit, and I didn't. I held it, and that's not paying attention to the signal. That's just going into a trader, what we call the trader hope. Taking some hopium. Hopium means that you hold on to something and you're hoping it's going to continue to go up, and not paying attention. You trying to outguess this, trying to each time say, well, this is the time it's going to flatten out and we're just going to rally. But how many times do you have to see this same reaction before you realize, hey, probably a good idea to get out here. 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 But no, sometimes you want to stay in it, and I understand that. I do it all the time. That's why you try to you analyze it, you talk about it. Still like the downward channels though, and that's probably one of the reasons I like that, because I know that these channels break to the upside, so I still like this pattern a lot. But realize, there's always, you always make yourself better, and to make yourself better is to remove the emotion of the trade. So let's just go take a look at it one more thing, and I'm sorry the length of this video. Hopefully you are, seeing some things new for the first time. ZNH, we talked about ZNH on last week's watch list. We talked about that great channel buy. That's almost setting up again, so that might actually be set up towards the end of this week, ZNH. Deutsche Bank never came down to our buy zone, so we never even activated it. Let me see here. All right, this is Gold Corp. It never came down to the buy zone, but setting up for this week. So actually, it's going to be on this week's watch list. And let me just bring it up for you now. But I'm going to go over it in a little bit, because I already charted it out for us. And we take a look at this nice large channel that's developed in this stock. And there you can see a little better levels. These pivot areas definitely starting to put in a pattern here versus this one. Even though this one was a little spike lower, what we're doing is looking for that opportunity, just in case the market gives us that gap down right into this level. So this is actually going to be on this week's watch list, and you know, there's a little freebie for those out there, or getting this preview video. But again, you know, I'd be buying Gold Corp if we did pull down into this 39 to 37 area, and we're oversold on the daily. The 60-minute chart, not quite oversold. That's why I would take this one on my terms and on my level down here. So I think that's a great buy opportunity down here. It'll be all over it, just like over here. Every time you got down here, you had a pretty vicious spike higher. So this looks great, Gold Corp. But we'll talk more about that on the watch list. I just wanted to go over, see if we had any more stocks on last week's watch list. Corning here was on last week's watch list. Was oversold. We had a nice flag. Take a look at how it's reacting. So here it is. You know, right where we were. Let me get this. Let me zoom it in here a little. And again, this is Monday right here. That's big white bar. So I knew going into this stock, you know, we go back and look at that video. We had this nice little flag, but we're oversold here. So, you know, we're holding off for recent lows. The divergence was there. There was a slight trend channel break to the upside. This was really my first rotation back on the 60. That's why I like this one. And from that point on, we started rallying. So pretty much for that whole week, we had this upside momentum. Stochastic still actually looking pretty good and moving a little higher. Still looks okay. Not an exciting stock, but it was just, again, what I'm trying to point out is preparation for the oncoming week is probably number one reason you make money in this market. You know, knowing what stocks could come to you, what stocks are going to be hitting certain levels. This is so important to have this information in front of you, you know, before the stock actually moves. Because you don't want to be doing that analyst on the fly. It's very easy to, you know, take the research, plug it into your alerts, and if those stocks happen to just come down for some reason, you might not see it. It'll pop up on your screen, and you say, "Wow, this is perfect," and you feel comfortable. And the next part of it, again, you'll see in the watch list, I'll be going over some buy entry size things. Could I have some setups for this week? I'm already planning out my entry size on different levels, so we're going to go over those. Caterpillar, great setup on last week's watch list. We talked about this combination of this lower trend line and the 200 period moving average, and you know, talking about this flag and how Caterpillar likes to flag, and just buying on the lower portion of the channel here would be the buy zone, which is in that 101 to 100 level. Now, let's see what if I had any more notes on there. That's Caterpillar right there. Caterpillar. Yeah, we're just talking more about Caterpillar. All right, so that was the end of Caterpillar, and then we'll take a look at the Caterpillar on this week, how it looked going into this week, and there you go. There's your downward trend line. Here's your 200 period moving average, and here's a perfect bounce off of that. So, I mean, it was a textbook, really a textbook entry on Caterpillar. If you took this lower trend line here, and the 200 period moving average crossed over right here, boom, it just took off. Nice crossover. It still looks good, and these kind of flags, again, continue to break to the upside. So this looks like. Now look at this underlying trend line. You know, you see everything coming together now. You start to build patterns out. You say, "Whoa, look at this." You know, this is interesting because you start to see a big directional move. You feel much more comfortable getting in, you know, getting into a stock that's coming off of its basically pullback, and it has a very strong uptrend. So, you know, this is actually pulls back out to here, just about. Yeah. So these flags inside of a bigger uptrend just continue to work that way. Everything looks good in Caterpillar going forward. Anyway, I think it's about time to start this week's 10 for 1,000 watch list. So let me just finish this one off a second and get the 10 for 1,000 watch list posted after this.